Hey everyone, in this video, I'm going to bring you one growth stock that's down 67% that long-term investors can feel good about adding to their portfolios in 2024 and holding it for the long term. So I'm going to reveal what this growth stock is and why I like it so much in this video. Let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the growth stock I'm recommending here is Coupang, ticker symbol CPNG. The South Korean Amazon is sometimes what Coupang is called. The company has been making nice progress growing its market share in the region and expanding into Taiwan. So it's got excellent growth prospects, limited saturation, and so I think it makes an excellent investment. Let's see all of the metrics that has me attracted to this growth stock. Starting with revenue growth, you can see from January of 2021 to the most recent trailing 12-month period, the company has nearly doubled its revenue from 12 billion all the way up to 23.15 billion. And given the early stages in development and expansion into Taiwan, I think this company has several years of growth ahead. In fact, I will share with you precisely what Wall Street thinks about the next couple of years of growth with Coupang. But first, I wanted to share with you how it's demonstrating economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. And so now that you understand the benefits of economies in scale, you can see Coupang starting to demonstrate that in the most recent year and a half. After its operating profit margin fell to nearly negative 9%, it rose significantly all the way up to 1.84%. And given that management thinks it can rise all the way up to 10%, there's more room to grow in terms of revenue and profit margin for Coupang. You can see Amazon and the way that Amazon has progressed in increasing its profit margin as it has grown in scale. And you can see that this business model can generate good or reasonable profit margins at larger scale, which is where Coupang is headed. Now let's look at what Wall Street thinks about Coupang. For fiscal year 2024, Wall Street expects Coupang to grow revenue by 13.5% and to grow earnings per share by a whopping 71.2%. Similarly, it expects revenue to grow by 13.5% in 2025, with earnings per share to grow by 51% in 2025. So Wall Street has great expectations for Coupang's profitability in 2024 and 2025, while double-digit revenue growth is expected for the next 2 years for Coupang. Of course, revenue growth is expected for Coupang longer term as well, but specifically for the next 2 years, that revenue growth rate is 13.5% expected. Perhaps more impressively than its improvement in operating profit margin has been Coupang's improvement in cash flow from operations, going from several quarters of negative cash flow from operations to finally hitting that inflection point and rising higher, generating 2.623 billion in cash flow from operations in the trailing 12-month period. And if its revenue and earnings per share grows as Wall Street expects it to, earnings per share will lead to increasing cash flow from operations as well. And that's great news for Coupang stock investors, and one of the reasons why I'm recommending Coupang stock. And lastly, Coupang stock is not expensive considering its excellent prospects. Coupang is trading at a forward price to earnings of 24.25, which is the cheapest this stock has been trading for going back all the way January to 2022. You can see investors have scarcely had an opportunity to buy this growth stock at a cheaper valuation. And remember the factor that I consider highly regarded as when you're looking at valuation, and that is to look for earnings per share growth that is larger than the forward PE ratio for the next 2 years. So let's compare that metric here. Let's keep this figure in mind, 24.25. And then let's recall the earnings per share growth of 71 and 51 for the next 2 years. So you're getting earnings per share growth of more than double the forward PE valuation for the next 2 years expected. Now that's a great comparison and a great valuation metric that I consider when I'm looking at an investment. It tells me that the price that I'm paying for earnings right now is going to look a lot more attractive in a couple of years because the denominator is going to grow, expected at 71% in 2024 and then another 51% in 2025. So that price I'm paying today for earnings is going to be a lot more attractive when I'm looking at it a couple of years from now. And I'm going to say, man, I'm glad I bought that stock a few years ago when earnings were much lower. And now I'm holding this investment with much better earnings at a much lower price because I bought it a couple of years ago, anticipating this growth was coming ahead. So for all those reasons, I think Coupang is an excellent growth stock that long-term investors can add to their portfolios in 2024 and hold it for several years. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.